Today, crypto prices fall after Silvergate's announcement that it's liquidating its business. And Dave Weisberger of CoinRoutes explains what the fall of the digital asset-focused banks means for the troubled crypto industry. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currency prices were in the red in reaction to news that the go-to bank in the crypto industry is shutting down. As of noon Eastern, Bitcoin had lost more than 2.5% and fell below the $22,000 level. Ether dipped 2%, trading above $1,500, and Solana fell more than 3.5%. The move lower started late yesterday, a few hours after Silvergate announced it will wind down operations and voluntarily liquidate its crypto-focused bank. Overall, Bitcoin and Ether have held up relatively well despite a challenging macro environment and a series of setbacks, including the Silvergate developments and the post-FTX regulatory crackdown on the industry that began in February. All right, let's jump right to our main story today, that announcement from Silvergate late yesterday that it will liquidate. In a statement, the firm said, quote, "In light of recent industry and regulatory developments, Silvergate believes that an orderly wind down of bank operations and a voluntary liquidation of the bank is the best path forward." According to its liquidation plan, all deposits will be fully repaid, but the bank didn't disclose how it would resolve claims against its business. The wind down comes less than a week after Silvergate shut down its Silvergate Exchange Network payments platform, and right as huge clients like Coinbase and Galaxy Digital were pulling their funds. Silvergate had been warning for months now that it was struggling in the wake of last year's crypto collapse when the bank saw a $1 billion loss in the fourth quarter and saw customer deposits fall by nearly 70%. Since that bank run, Silvergate laid off workers, delayed financial disclosures, and admitted its ability to survive the next 12 months was a going concern. Now, it's the latest casualty in the past year's crypto meltdown. To break down the fall of Silvergate Bank, Crypto World's Mackenzie Segalos spoke to Dave Weisberger, the co-founder and CEO of CoinRoutes. He explains how we got here and what the bank's liquidation means for the beleaguered crypto industry.
Okay, let's talk next steps for Silvergate. How does this play out? What do next steps look like in the liquidation process?
Well, I think that it feels pretty orderly to me. The fact is that one unknown is, will there be a buyer for their technology, for the SEN, the Silvergate Exchange Network that they built? And it's hard to tell. They have competitors. Obviously, Signature has a competing product. So if there is a bank that wants to get into that for pennies on the dollar, we might see that happen. But otherwise, I think it's a very textbook unwinding process where depositors will get their money back. I haven't heard any indications that won't happen. But what we don't know is if any of the assets will actually be saleable.
Mm-hmm. And we've known for a while that Silvergate wasn't doing well, so this didn't come as a particularly big shock. But what are the ramifications? Just how significant is it now that Silvergate Bank is folding?
Well, it's funny. When you talk about ramifications of events, you have to look at two pieces. Piece one, what are the direct effects? And the answer to that is virtually zero. There's almost no ramifications. There are two different ways that people can get their money from into exchanges and around exchanges. One is via stable coins using things like USDC, as Ian Weisberger, who's the CTO of CoinRoutes, pointed out to me the other day. You can actually trace a direct line from Silvergate's initial struggles in February to almost a 10% increase in use of Circle's USDC coin. The second is Signet network that's owned by Signature, which is widely used. And then there are other smaller ways. I don't really think that it matters that much, except for the fact that the crypto industry is now using or heavily reliant on what's remaining. So it doesn't feel like a big direct effect. But the indirect effects are going to be simple. There are people in the government, there are people in private industry, most notably at the banks, who don't like DeFi, who don't like Bitcoin for a variety of reasons, mostly that could disrupt their businesses, who every time there's an event, use it to try to scream for crippling regulation or shutting things down, et cetera. And I think it's yet another one of those. So the cacophony of those sorts of what we in the crypto industry call FUD, fear, uncertainty, and doubt, is likely to increase. And that is non-trivial because the reality is perception is reality. And if people lose confidence, then it makes it easier to pile on.
It's always been difficult for crypto companies to establish a connection to the global banking sector. You had the Wall Street Journal reporting last week that the firms behind Tether were going so far as to establish shell companies in order to open bank accounts. So this was already difficult for years now. Silvergate was around for almost a decade. And I know that you said that you're not as concerned that the existing infrastructure can handle the influx of new customer deposits, but is there concern about any sort of precedent that's being set here in an industry where it was already difficult for crypto companies to enter into mainstream banking and the TradFi universe?
Yeah, I mean, of course it's concerning. I mean, a long time ago in my past, in a galaxy far, far away, I built the first program trading system on Wall Street for Morgan Stanley. And I watched how the active traders or sales traders who were charging 8 cents a share at that time got very angry about program trading, and they did everything they could to make it very difficult. The fact is, in 1990, I'm sorry, I'm dating myself, but I sat in a room with technologists all around the street, and the question was asked of us, when do we think the markets will go fully electronic? Well, I said 15 years. And people thought I was nuts. They said, well, but the technology already exists. It should be less than everyone else. Literally no one else in that room, and there were 7 or 8 of us, said anything less than 5 years. It was all 2 years, 3 years, 4 years, 2 years, 5 years. I said 15. They thought I was crazy. But the reason I said is because when you make markets more efficient, people who are extracting economic rent, intermediaries, make less money. And so I knew that there would be fighting. Well, both DeFi and Bitcoin, for different reasons, threaten the banking establishment and the profit margins of very, very well-connected players. And it's not remotely accidental what you hear from large bank chairmen when they talk about Bitcoin or they talk about DeFi. They all kind of understand it's a new technology, and they kind of understand the non-sovereign store of value idea, but they really don't want it to succeed. So, of course, people in the traditional financial world, allied with their protectors in Congress and in regulators, will always fight against disruptive technology. It's a story that's gone back, as I said, a long time, and it's different reasons. If you look at DeFi, it very much is a threat to a lot of very entrenched businesses, whether it's securities lending or interest rate swaps that are extraordinarily profitable for the large banks. There's a threat if DeFi gains a toehold. Now, DeFi is in its infancy, and it's obviously a lot easier to kill it when it's in its infancy. Bitcoin is something completely different. Bitcoin threatens the ability to print money. And I know you had a lot of guests on your show that go through that value proposition, but let's just say there are people who want government control. They don't like Bitcoin because it represents economic freedom. So they will take the possibility of expanding what is happening and to try to make it into a narrative that says, you see, it proves that crypto and Bitcoin is problematic. And so that's not remotely surprising.
I mean, with Bitcoin also, when you think of it as a payment network and the fact that it can be this underlying technology to facilitate seamless cross-border payments, remittances, it's pretty fascinating to see what's evolving on that side of the equation as well. Last question for you. You said that you think that the contagion effect is, relatively contained, so it won't ripple into Bitcoin. Of course, in the short term, we are seeing price movements. Bitcoin down roughly 7% in the last week. The crypto market cap back below $1 trillion. But why do you think that ultimately this isn't going to have any sort of long-lasting effect on the wider crypto ecosystem?
Well, if this is talking about Silvergate, it's because it is a small player that had made an enormous contribution early in the development of the ecosystem, but the market is maturing rapidly. I mean, I used to feel like I stuck out like a sore thumb 6 years ago when I left TradFi to move to crypto. I was told I was crazy by most of my friends in TradFi. Now, I get asked for jobs or advice, and literally, I'd say 30% of my friends in the industry are either moving into crypto, looking at it, or doing something on the edges with it. And I believe we are at critical mass. I do not think this train is stoppable at this point. And so, yeah, I'm fairly hopeful. Will it be difficult? Will there be hearings? Will we see regulators trying to gut punch various pieces of the technology? Sure. Does this event add very much compared to the theft we saw at FTX and the incredibly bad risk disclosures or lack thereof of the centralized lenders last year? I mean, on a scale of 1 to 100, those events were in the 90s of badness. This is maybe in the teens. And so I just don't see it as having that big of an incremental effect.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.